In this video we will record transactions 1, 2 and 3. A reminder that there is another video that goes in quite some depth into transaction 1, and so if you've not worked in retail before, it might be worthwhile to just have a look at that video to see what goes on behind these transactions. So remember that these early columns are just to help you shape your thinking for recording the transaction. So the first decision you need to make is what journal it goes in, and you've been through this exercise, but you're going to sell an item of inventory on credit, so that will go in the sales journal. If it goes in the sales journal, it will also impact on the subsidiary ledger, and that will be accounts receivable. You're selling inventory, so yes, that will involve inventory. You're making a sale, so yes, that will involve GST, and that's just a bit of a warm-up, which we'll now go through in detail. Now, a big thing to remind you of when starting that will really help you save time is to arrange your windows. So we'll go to View, a new window. We'll go to View again, Arrange All, and Vertical, and we have these windows now side by side. Now they're all not fitting in, but as we get to important bits, I will focus in on that. So the first transaction is sell 17 computers on credit to Fred Flintstone. Now if we're selling computers, if we've got a transaction that involves inventory, usually it is good to start with the inventory entries first. So let's go to the other side and find inventory. And we've got inventory. It almost fits. I'll make it fit when we get to the important part. So the transaction date is 4th. So we go 04/06/2017, and it doesn't go green, so I'll have to come back and fix that up. There's no purchases. This is about a sale, so we're making a sale. What's the quantity that we're selling? We're selling 17 computers. Now the cost here is the cost, that's what they cost us, not what we're selling them for. And so what's the unit cost? Well, we go by seeing the inventory we have on hand. We're using an average cost system. So every unit that we've got 157 units with a total cost of $235,500. So that's an average cost of $1,500 each. So that's the $1,500. The total cost is 17, or sell F11 times sell G11. I've got out of my formula. Equals F11 times G11. Now we need to complete our final inventory on hand. We had 157 items, opening balance. We sold 17, that will leave us with 140. Our cost at the end, it was 235,000. That's just hiding. I'll move this across. It was 235,000. It's we sold 25,500. So our closing balance will be 210,000. The average cost of that, we know it won't change, but we'll calculate it anyway. 210,000 divided by 140 equals $1,500 is the unit cost. Now, what's going to happen with that? I've need to arrange again, arrange all, vertical. I'll come back and fix. So, first part, we've done the inventory. They've swapped over sides, but we can work with swapped over sides. So the next thing we'll need to go to is the special journals, and we record this in the special journal of the sales journal. So we go back here, we've got S sales journal, it's a sale on credit. So the date is June, or Jun, 04. And that hasn't gone green either, so I'll have to look at that. The name of the account is Fred Flintstone. Now what we could do here, if you want to put a direct link in, we could go to the subsidiary ledger, because this is what we're dealing with. This is the account we're talking about, Fred Flintstone, and we put the account name Fred Flintstone in, or you could just type Fred Flintstone. The terms here, they're right over the far side, 10 stroke 10 net 30, and we'll see the invoice number is 241, and we don't have a reference yet. So now we've got some challenging things. We've sold, let's work out the sales first, 2,000, and we've sold 17 computers at $2,100. That's the unit price. Now we've got to add GST to that. GST is at 10%. So we can either divide by 10 or multiply by 0.1. So I'll go multiply by 0.1. Usually I divide by 10, but technically we're multiplying by 10%. So multiply by 10%, which is 0.1. So that gives us the GST. That means the total amount that Fred Flintstone will owe us will be the amount for the sale, $35,700, plus the amount we've collected for the tax department, which is GST. So Fred owes us $39,270. The inventory is, we need to go to the inventory to get that item. So I'll go to inventory here. Gone too far. Back the other way, inventory. And the total cost of sales was $25,500 from the inventory. So that's all done. You can see for this worksheet we've raced up to 4% as a whole. So we've made a credit sale, and we've made a recording into the accounts receivable column. So that means we also need to update the accounts receivable subsidiary ledger. But before we do that, let's fix up a mistake we've made. And we've had a warning about that mistake. We've got our 4 didn't change here, and the 4 didn't change in inventory. So let's just double check that. And we go sell 17 computers, but the date was the 1st. So if we got some cells that are meant to turn green and they don't, let's check them. June 1, and we can go to inventory and go 01. And we find that's both now correct. Now special journals, and as we said, we need to go to the accounts receivable subsidiary ledger. We'll do this on the right side of the page. Accounts receivable, subsidiary ledgers, accounts receivable, down to Fred Flintstone. We've got in there June 4. We know that is June 1. We have a transaction. Now we'll write in there an explanation, which is sale 17 computers. But, and I think it's a good habit to make these explanations, but a lot of the transactions we have here don't actually require explanations because they're self-explanatory. If you've got a sale, if you're recording something in the accounts receivable subsidiary ledger, you know you've either made a sale or someone's paid. So let's have a look at this. Debit, we'll link this over here to the debit column. Fred Flintstone owes us another $39,270. Now remember the formula pattern we'll have here, and we go the opening balance. This is a debit plus any debits minus any credits will equal the closing balance, and we can copy that formula down. So we highlight those cells to there, and we can go Control D. Control D is to fill down. Now they haven't changed because we've just put the formulas in. we have yet to put the transactions in. And the closing balance will equal that column there. So it looks like we're not going to have something interesting about these transactions to finish if our closing balance is correct. So that is now correct. Now a few things we need to do. This is the journal reference column. So this comes from the sales journal and it is S1. It is number 1 in the sales journal. You'll see that back over here written there. What we could, if we want the links to keep going, we could go equal S1. And this is normal balance as a debit. Again, we can put that in, but we don't need to. But the space is there for you to do that if you wish. Now over here, we're going to put in a T. Now what does the T mean? The T is shorthand for tick. In the old days, we would have put a tick in there to say we've posted this item to the subsidiary ledger. But now we moved computerization and convention became to do a tick. That is the first transaction done. So let's do the next transaction. This will require us to go to the transactions and purchase 20 computers on credit. So that's going to be the purchases journal. The date is going to be June 4. Here's our June 4. Account credited is Orange Computers. So let's go to the subsidiary ledger. Go down to the creditors journal. Select Orange Computers. And we know we've got the right account. The terms here are 210, which means we'll get a 2% discount if we pay within 10 days, but we're expected to pay within 30. Is that what I've got? Well, that hasn't updated, so I will check on the reason for that. 210, I better check 210. Posting reference, we don't do that till we post. Now, and as we said before, if you've got a transaction that involves inventory, it's usually wise to go to the inventory record first. So let's go to the inventory record, and we go here, date 04, 06, 2017. And this time we have made a purchase. We have purchased 20 computers from Orange Computers for $1,660 each, excluding GST. Now, that's the way we would want to record them in here, but it will mean when we record what we owe, we will actually have to add the GST on to each of these items. So the values of these computers are only $1,660 each, but the amount we'll have to pay for them is that plus GST. So look at this, we put in the total cost of these computers, 20 times 1660 is 33,200. Now put in the closing balance, 140 plus 20, we'll know that is 160. We can just fill that formula across, because the next formula, I'll fill it across, so I'll go Control R, and away it goes. No we can't, because that's the average. We could fill it across to here. So we could copy that formula if we filled it all the way across. And then we delete this one. So Control R will fill the formulas. And why do we fill that across? Well, you see the formula that comes up. L1, that's the cell 1 above me, to and add that to that D12, that's the cell a lot to my left. Now we work out the average is 243,200 divided by 160, and we can see the average cost of the computers has gone up by $20 each. Now, why is that significant? Well, when we make a sale next time, that's going to be the average cost of the computers. So, but we've done that, we can go back to the special journals and continue on. So the inventory debit, we work that out, is 33,200. Now we've got to add the GST onto that. We know the GST is 10%. We can divide by 10 or multiply by 10% or multiply by 0.1. Multiply by 0.1. So the accounts payable, what we're actually going to owe to Orange Computers, even though we only got $33,200 worth of computers, is $36,520. And why? Because Orange Computers are obliged to collect GST of $3,320 from us. So we can now post this to the subsidiary ledger. So I'll go to the subsidiary ledger, down to accounts payable, Orange Computers, June 4. We could put the links in. I think it'd be much quicker just to type in June 4, and these are not figures we'll come back to later. It is purchase of 20 computers, and this will be a credit. We can see the accounts payable column as a credit, so this will go in here as a credit. And we know it's a credit because we've increased the liability. So when we write the formula for this, the normal balance is a credit. So the formula is going to be a bit different to the debtors ledger or the accounts receivable ledger, because it's this way. We got the opening balance, yes, the same, but we would deduct any debits and we add any credits. I put in an equal sign there. Let me change that to a plus sign, and that will now fix up, and that is a credit balance. And again, we can go all the way down. We can copy that formula all the way down, fill down, Control D, and put in a closing balance. And again, remember, they will not necessarily be correct until the end, except by coincidence. Now, this came from the purchases journal, or we could write in P1, and this, yep, we've posted this T for tick. We're flying now. That's 2 entries done. Let's do the 3rd entry. And we go back to transactions. 3rd entry, we received cash payment from sporting goods of 29,000. So a different journal again. Actually, we didn't do that last time. This will go in the cash payments journal. This one went in the purchases journal. It involved an account payable. It did have an impact on inventory, and it does involve GST. There, so I better see what the codes say. Cash payment, sorry, this is a cash receipt. We received a cash payment. So we've received cash. The emphasis on received cash. So this is a cash receipt. It will impact on the accounts receivable, and you can put these in lowercase or uppercase. Accounts receivable. It doesn't involve inventory. We've already made the sale, so it doesn't involve inventory, and it does not involve GST unless there is a discount. So I'll just leave that one for a moment. Generally you'd put in here an N, but if it involves a discount, then it would involve GST. So we go to the cash receipts journal. June 7. Account credited is Sporting Goods Company, subsidiary ledger. Sporting Goods Company. So when we're doing the posting reference, we're going to cover that up. This is the cash receipts journal, so we need to find where it says bank, and that's going to be the very first column, so that's right, which is bank, and we're going to receive 29,000 of cash. Now, what does that relate to? It relates to accounts receivable. We see the credits start. These are the debits, these columns, and these are the credits. And this relates to just a $29,000 credit to accounts receivable. That was a pretty simple transaction. If it had GST, if it had discount involved, then it would become a lot more complex. So we will have transactions like that. So now let's post this to the subsidiary ledger. We go Sporting Goods Company down to this transaction, which was June 7, payment, or receipt of payment, or payment. It's going to be a credit, because we've been paid money. It's going to reduce that balance. Normal balance of account receivable is a debit, but this is going to reduce our asset of account receivable because it's been paid. It will at the same time increase the asset of cash. 29,000, do the balance, here's the formula, is opening balance plus debits minus credits and equals 0. Doesn't matter whether that's a debit or a credit. The link, the posting reference, the journal reference is CR1, cash receipts 1. So that is now complete. We can see we're making rapid progress on the accounts receivable subsidiary ledger and the accounts payable subsidiary ledger. So back to the journal here, we have posted that to accounts receivable. We can put in AT. So we've done the next 3 transactions, transactions 1 to 3. That's been pretty